Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, June 11th, 2021. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. We have a nice program today for you. So we'll look again at stocks that are indeed again hitting all-time record highs. They seem unstoppable. We'll see possibly where they're gonna go. People have been asking me about GameStop, what I think about GameStop. I'll tell you what I don't think about GameStop and how to not trade pretty much any stock, especially this new thing with meme stocks. Junk that is hitting new records. This is a great news. This is a bullish confirmation for the stock market. I think stocks can go significantly higher. We're looking at oil and especially natural gas. Natural gas exhibiting extremely bullish pattern. I'll show you what I mean. Dollar is really getting close to the new lows again, and gold is still not really anywhere. It's just kind of stuck between the bullish and bearish level. So we'll look at that. And we'll look at Bitcoin as it approaches bearish levels. It could easily collapse to at least 1900. Could be possibly to zero. I don't know. Those things are just weird. But technically trading, I'll show you what I mean. And I have two more newsletters. I have a newsletter which is called Elite, where we trade ETFs and large cap stocks. And I have a newsletter called Speculator, where we trade, breakouts. So this is a breakout stocks, my favorite, absolutely favorite kind of trades. So if you have a subscription, stay tuned. If you don't have a subscription, sign up at MasterCharts Trading. Okay, so let's look at S&P 500. So once again, we are again at records. There's the record on the 10th of June. I think it could easily go higher. As I keep saying, Dow Jones is like 30,000. I don't see why it cannot triple to about 100,000. Especially now I'm hearing about this scary new thing called inflation that is apparently happening. And the stocks are reflecting that. In fact, they've been reflecting that since a while back. Breakout occurred back here in April of 2020, in the middle of the pandemic still. You see, this is why we did not sell short. This is a purple arrow. I did not want to sell short it back here in March of 2020. Additionally, if you had positions from, back way back when, we were exiting them right there on the 25th of February 2020. And I'll tell you the truth, I do not know anybody that I can get information about insider trading. So this is all I know. I got this blue line in front of me. This is my indicator line. If you need to find out more about them, look in the description of the video, and you can go to my website. But this is all I needed to know. And remember, if you remember, back in February, March of last year, the Congress was investigating some of the congressmen and some of the lawmakers for what they thought was insider trading. It's very much possible, but why would you want to do that when you can just look at one line, right? This is all I needed to make a decision. I sent to my subscribers. We exited all of our retirement portfolios and set it out. So we set it out from February 25th, 2020 until April 29th, 2020. So this period was, quite crazy, volatile. But now we're in the middle of an extremely bullish period. And you can see we started buying back then. Really no opportunity to buy again. I like to buy around the blue support resistance line. And there was no opportunity. Not until now, actually. There's no opportunity. Now we have a new record, so it looks like it's another short squeeze. So in other words, people who thought that market will continue lower, they put their stop somewhere above the, latest highs, or which were set on 10th of May here. And now we're kind of squeezing them out. So because the price is going higher, so they need to cover their short. And what do? They buy, right? To cover a short, you must buy. So this is what's happening. Basically, we're just watching this thing go higher and higher. How high will it go again? Again, nobody really knows. Will it pull back? Of course it will pull back. We don't know when, and we don't know how deep. This was a pullback back in October. It was a shallow pullback. I didn't really want to trade it. If it pulled back deeper towards the blue line, I would have bought, started buying it. But there was no opportunity. So basically, what we're doing is we're sitting in our position. We're sitting tight. This is the best thing in the stock market to, there's a great expression. You need to be right, you need to be correct, and you need to sit tight. You need to just kind of get into this position and do nothing. As little as possible you should do. As little as possible you should do in the stock market. Here's NASDAQ, QQQ. So a lot has been said about this underperformance back in February. There's another underperformance back here in April. But overall, I'll tell you that here you can look at my correlation coefficient, this red thing here. You can see it's basically positive, almost 100% positive. So we had a little dip into the negative territory here back in May. Does it mean anything? No, because by and large, it's almost 100% correlation. Correlation means that the stocks, or the two things that we're trying to correlate, they do the same thing, generally speaking. So if S&P goes up, NASDAQ goes up. If S&P goes down, NASDAQ also goes down. So we're sitting tight again. Opportunity to buy was in April of last year. You see, this is where the arrows were. So right now we're again doing nothing. We're just sitting in the positions, waiting for another pullback, and we need a deep pullback for me to get interested. So the deep pullback that I'm referring to, if it stops right now and just reverses for some reason, so I need to see at least 11% pullback towards the blue line here. This is what I call strong support. That point we'll consider buying, but right now no point. Here the small cap side WM also approaching new records. They're also extremely highly correlated. You can see the correlation coefficient is highly positive, and occasionally dips into negative territory. Does it mean anything? Not really. What it does mean is that we have more than one opportunity to get into the market. So for example, if NASDAQ didn't really have any opportunities back here in September, October of last year, with small caps we were able to get in right there in September, which was good for 63% gain. So congratulations to the subscribers. And here are the GameStop. So everybody wants to know about GameStop. For some odd reason, people are so interested in this stock. I'm just so not interested in it, but I will cover it. So I wrote this to my subscribers. I'll just read it because I think it's very important for people to understand how to even wrap their minds around trading anything, and especially this crazy meme stocks, because people think that somehow meme stocks are different than other stocks. They're not. They're identical. They're just more popular, maybe. So if this pandemic calamity has taught us anything about trading, it is that we must completely ignore the news, statistics, economic indicators, and especially the pundits. Everything is on the chart, and price has already discounted all the possible events relevant to the stock market. So let's go over this GameStop. GameStop was out of favor for a long time. We can see how far it was out of favor. The last time conceivably it was in a bull market was in 2019 January, where I'm hovering right now. After that, it was unequivocally in a bear market. You can see it continued down, 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 until something happened. I don't know what happened. I don't really care what happened. We just need to see the technical pattern. You see, my indicators are showing this technical pattern quite nicely. So for some reason, it started moving higher. Does it mean there was some sort of shake-up with the CEOs? Maybe they started making money. Maybe there's something else going on. But on this chart, none of this actually is showing, because we don't know what's happening. And since I'm 100% technical trader, I don't really care. I just want to know what the stock is doing relative to where it is currently and where it was before. So as we progress forward, we can see a clear breakout. We don't have to, think. There it is. I'm hovering over it. It's on 28th of August 2020, right there. So at this point, if I was interested in this stock, I would just buy it, okay, and put my stop at the yellow line, etc. So that is a technique. I can explain it in a couple of minutes. It immediately went in our favor. There were more opportunities. I marked them with the up purple arrow. So there were many opportunities to get in. So here in November opportunity, another opportunity to get in here in December. Did I actually know anything about Reddit? Did I know anything about opinions of other people, such as Elon Musk? No. Do I care about those opinions? Absolutely not. Okay? You have to understand that. Everything is already on the chart. You see? All of the opinions, all of the events, all of the price to earnings, all of those things, they have already been discounted. And there's a wonderful saying, price discounts everything. Okay? So we don't have to think, we just buy, okay, at this point, when where the arrows are. And isn't it obvious? It's pretty obvious, right? For some reason, it just took off to the moon, as they say. It went up as much as, I don't know, this is an obscene number, 2,434%. So it went from something like $9, where we would be buying it, to $480. Where would I have exited? So most likely I would have exited where this yellow arrow is. Okay, I'm going to zoom in a little bit more. I would have exited right there. Why? Because when the stock, if we bought it back here, where last opportunity was, right there, 10th of December, I would have exited when the stock dropped below the blue line. And also this, the size of this candlestick, and also this just enormous gap, like this is probably a hanging man candlestick. So I can read candlesticks, and I would have just like, okay, this is good enough. So I would have most likely exited on 28th of January, and then at that point I would have just done nothing. Okay, I would have said, the stock had a good run. Don't know why. Don't care why. Okay, technically speaking, we don't care why. This is an important question this is an important point to understand. People keep asking the question why. You do not have to answer that question. In fact, I would highly discourage people from answering that question. You have to answer the question how and what. So how are we going to trade it, and what are we trading? In this case, we're trading GameStop. Okay, so, and this is it basically, right there where I'm hovering on 4th of February. This is a bear market for my taste. In other words, right now, I'm thinking that it is no longer in an uptrend. It is now in a downtrend. Absolutely, there are going to be fluctuations. There was an enormous spike I'm about to show you. So if you were like me and you were like, oh wow, we should short this stock, so I would have possibly, I wouldn't short it honestly, because I don't like to short stocks during a general bull market. And obviously, as I just showed you a few minutes ago, S&P 500 was in a general bull market since April of 2020. So why would I want to short stock during a general bull market? I would not want to do that. Okay, I would just do nothing. I would avoid the stock basically. And obviously we're not trading it, so I'm showing this for educational purposes. So if you are hell-bent on shorting, this would have been a good day to do it, 25th of February. You would have put your stop at the blue line and see what happens. So still, you see, there was no stop wasn't hit because there was no close above the blue line. My stops are always on close above the blue line or on close above anything else. Okay. So you can see that a few days ago it again spiked. There it is. And it again spiked towards the blue line. You can see how really well these indicators show the support and resistance lines. Showing support resistance levels rather. So far the bullish levels did not, it hasn't come to the bullish levels. It kind of touched them, but it hasn't confirmed yet. Okay, so at this point I would still consider the stock to be bearish. Okay, so what I'm seeing here on the 8th of June and on the 9th of June is what's called rejection. So stock came up, touched that level, the bears came in and just mauled all the bulls. They just kind of chewed on them, and so far they were quite successful. So again, please understand that all stocks, all tradable securities that are traded on an open market in a quote-unquote honest fashion, at least with some regulation, some oversight, I believe this is a tradable security and it's traded with, some sort of honesty. They all behave the same way, you see. So this is how not to trade it is you have to not listen to anybody. Okay, you need to just look at the chart. If you want to listen to me, that's fine, but I am telling you to look at the lines, look at the chart, look at the way the stock is behaving. You see, if you listen to people on the Twitter, if you listen to people on TV, they'll tell you all kinds of things. In fact, some people believe them. There was a huge thing about this QAnon thing, and I mean it's total lunacy, but people believe in it, right? So they said it on TV, so that must be true. Does that make any sense to you? No, it doesn't. Okay, so if you're trading, if you want to make money in the stock market, you gotta just ignore it, okay, and only concentrate. Notice on this chart also, there is no volume, there is no momentum indicators like MACD or RSI or any of those things, because honestly you do not need them, and for me it's just clearly on this chart already, so I don't need any other indicators, you see. So please, again, ignore everything, just look at the chart. You will save yourself trouble with your health. You will you will save tons of money, and hopefully you will make tons of money if you just look at the chart. Please. All right, so there's my imploring and supplications. Let's move on to junk bonds and bond universe in general. So this is junk bonds, JNK, just made a new high for the move. So this is really very, very good news, because junk bonds and stocks, this is again one of my favorite indicators, correlation coefficient. Junk bonds and stocks correlate surprisingly well. I'm gonna go back a while back. You see, it's mostly positive. Vast majority is positive. I'll show you what a negative correlation is. Here's TLT treasuries, or a poorly correlation. I mean, it's mostly negative. TLT usually, but not always, moves opposite to stocks. Treasuries are long-dated bonds, while junk bonds, JNK, usually, I would say, well over 90% of the time, are doing the same. I'm gonna turn this off. Are doing the same general thing as the stock market. Okay, so for stocks, because we trade stocks, it's important to know that. And since just now we saw a new record, or a new, I think it was 52-week high for stocks. This, in my mind, shows that stocks, or rather the junk bonds, have confirmed the move higher for stocks. So in general, this is a very good news for stocks, and I think both stocks and junk bonds will continue higher. And here's Treasury's TLT. So it is currently in a bear market. The bear market began right there on the 6th of January, date of the insurrection. This is an actual alert. So if you were sophisticated, and if you have you are able to buy puts or outright short stocks, or ETFs in this case. There are also inverse ETFs, such as I think TMF, if I'm mistaken. Oh, TMV. Right there, TMV. So that's a inverse ETF, bear. You see, 3 times bear. So not an ideal thing, but you could have bought it, let's say right there on the 6th of January, and you would have made really good money right there. Okay. What's happening now? Since we're in a bear market, the trend is down. We're in the middle of a rally, and this is called a bear market rally. So because we're in a bear market, we're rallying, so we're going to call it bear market rally. Where is it going? I think it's going towards this red support resistance line. So as I just showed with GameStop, this support resistance lines are extremely helpful to me, at least, and to my subscribers. They show really good levels of where to perform trading activities. So if you're down here, like let's say you shorted it, back in January 6th, you would have probably taken some profits. I would have taken profits, like, let me see, right there on the, right there on the 15th of April, I would have taken profits. And probably even right now I would be taking profits. So what does it mean I'm taking profits? So that means I have to cover my short, right? I have to cover my short, and what does it mean? I have to buy on an open market. So if our direction is down, we're short, we need to cover the short, and that means so many people are doing it, prices are going up because we're buying. We need to cover what we already bought. Okay, so that we shorted. So it's approaching these levels of where, again, we would be thinking about selling short. It hasn't yet gotten there, and once it gets there, we will consider, okay, is this a good opportunity? Is the price pattern good? So this opportunity right there on the 27th of January was excellent. Price pattern was exactly correct. The price came up to the red line, touched it, and rolled over. So this is where we would have shorted it on the 27th of January. Right now, we're still waiting. And a little bit of commodities. So here is CL1 exclamation point, also known as oil. New high for the move. Everybody wants to know about oil. Don't know what it's going to do. It looks like it's in a bull market. Looks like it's continuing higher. There's no opportunity for me to buy. I want to see a pullback towards the blue line. If it pulls back, maybe we'll get in on some options. But right now, I just don't see anything. I'm just not really interested in this chart. I am very interested in this natural gas chart. So here's natural gas futures. And again, obviously, we can see these up arrows. And these are, again, actual alerts to my subscribers. Now, if we zoom out a little more, I'm going to turn off the annotations. But if we zoom out a little more, we can kind of see this big pattern that began in November of last year. Then there was another attempt at the record here on the 17th of February, and now we're again approaching the same level. So this is just classic, like a W kind of thing, with a possible like a maybe humongous cup and handle, whatever you want to call it. So the depth of this pattern is quite large. It's 36%. So that means normally that we're going to see something of the same nature duplicated on the upside. So we're looking at a sizable move to the upside. You see, easily like that much maybe. So natural gas looks extremely bullish, but I wouldn't be buying it up here. I would be buying it down there on 16th of April. You see, the risk up here is quite large because I need to put my stop somewhere. Where would I put my stop? When I trade commodities, I put the stop at the red line. When I trade stocks, I put the stop at the yellow line. So two slightly different systems. Again, I can explain it. If you need more help, find out, look in the description, go to my site. So natural gas looks very, very bullish. I would be, we are already long, obviously. So, we need to just wait a little bit and see where it goes. But right now, this is a really bullish pattern. Okay, coming to a close, dollar index approaching new lows, but still not at new lows. So very close to new lows, but not yet. Additionally, I'm going to project the price, or rather indicators, into the future. So I have my indicators, one of the 2.0, one is a 6.0. So 6.0 can actually project into the future, and so we're projecting the price action, not the price action, we're projecting the indicators into the future. So what I like about this pattern is that the distance between the lines is narrowing. So if it was about 5.7 points back in June, actually right this instant, in the future, not so distant future, even in July, it's already going to be 3.7 points. So you can see it narrowed down. What does that mean? It means that the price will have less difficulty to get to the bullish levels, and bullish levels are above this blue support resistance line. So dollar index either needs to make a new low really quickly, otherwise it's if you're a dollar bull, then you'll be very happy because the bullish levels are really approaching quite fast. By extension, if the dollar is going to gain, it will weigh on precious metals because precious metals are priced in dollars. So the more expensive the dollar is, the less expensive the metals will become. So right this instant, if we just look at this chart, we already saw a breakdown. So again, remember that for Forex, commodities, cryptos, we're using the red and the yellow line, but if you're trading stocks, you need to use the yellow line as your stop. So the breakdown already occurred as early as 8th of March of this year. And right this instant, you can see that the gold is sort of stuck between the bullish and bearish levels. So if the dollar gains even a little bit, we can see gold roll over again. And that's the inflation expectations right there. So if the gold will continue lower from here, then those inflation expectations could be wrong, you see. Please don't get married to notions. Don't get married to some ideas. You need to be very flexible. Once again, I'm going to hammer it. I do a lot of yoga. I do a lot of meditation. What does yoga do? You get really flexible, right? I can touch my head to my knees. Does that mean that means I'm pretty flexible, right? Now, for some reason, when people start trading, flexibility just goes out the window. And they just say, okay, I know what I'm doing. I am correct, you see. And this is so dangerous. It's horribly dangerous in stocks. You need to say something like this. You need to say, I could be correct, but if I'm wrong, I will change my mind in an instant. I don't have to be like a military. I don't have to be like a politician. I don't have to be any of those things. I just need to make money, right? And how do we make money in the stock market or in the gold market? We make it through flexibility and open-mindedness, okay? So right now, I'm looking at this chart and I'm not really seeing too much. I'm seeing mostly bearish. I already see that we already broke down back in March. So if anything, my bias is to the downside. Even though we had this humongous rally from 30th of March into 1st of June, we still haven't gotten to the bullish levels. They're really close, but they haven't been breached yet. Okay, so we must be very flexible and we must follow the system. Otherwise, you will just collapse and lose money. Something like 90% of people fail in the stock market. Okay, so if you don't want to fail, be flexible, be open-minded, and use the right tools for the job. I think the indicators are super great tools. Okay. Here is a gold miner, GDX, and I can show you right there. This is called resistance. It's a wonderful example of resistance. You see, the price came up to the blue support resistance line. It touched it on 19th of May, but it didn't breach it yet. It didn't close above it, and so far it hasn't been able to. In fact, between 2nd and 3rd of June, it gapped down significantly. So this is not a great sign for gold miner bulls. I am still, if or when it closes above the support resistance blue line, I have absolutely no problem saying I was wrong and buy this thing. Okay. But it hasn't happened yet, so we must be open-minded. It's extremely possible that we can roll over and just collapse. It's also very, very possible. Okay, so those whole inflation things could be due simply to supply disruptions. Right, finishing up Bitcoin. Sorry, I'm rolling way over again. But Bitcoin here is a very interesting chart. So we called Bitcoin multiple occasions. So again, actual alerts here back in January, actual alerts to buy back in April when it was about 7,500 or so. It went to 63,000. This is a 525% gain if you held on to it. But now things have changed somehow. Something happened to the nature of this Bitcoin thing. We broke below the support resistance on the 17th of May where I'm hovering. We touched the bearish levels 3 times already. And the latest one was right there on the 8th of June. Really, really very close to bearish levels. So what I'm thinking is, if we close below this level, currently it's 30,900. 30914. I'm reading it right off the chart right there. I think if we close below that level, we can collapse to 1900 easily, possibly lower. So again, be very open-minded about those. I'm reading all kinds of, things about this Bitcoin, like it's the future, it's this new thing, and it's just the best, right? But I'm looking at the chart and I'm not seeing it right now. I would agree with you a while back. For example, I was very much bullish right there on 22nd of January, in January, and I was saying, okay, my subscribers should be buying it, and I send this to my subscribers. But right now, I can't say that. I'm not. I don't like this chart. I want to see some kind of resolution. If it goes above bullish levels, above 44,500, no problem. We'll start buying it. But if it goes below the red line, 30,900, then if you're able to, I would short it. Okay. All right. So that's it for the presentation. Head over, if you haven't yet figured out how to get the lines, so you need to head over to MasterChartsTrading.com. You can also go to the description in the video, below the video, and click on that, and it will take you right to the my site, MasterChartsTrading.com. So again, you can sign up for just the indicators. They're only $30. Yes, $30 sounds like a lot of money to some, but if it sounds like a lot of money, I have a new cool thing. It's called the Trading Academy. So you can get basically this package, indicators and newsletters. If you sign up for the Trading Academy, there's some requirements that you need to be it's like a sliding scale, I guess. So if you are able to pay more, then it's an honorable thing to do. However, if you're really having a hard time affording $30 per month, then sign up for a trading academy, and we will work with you to make you into a trader. Trading is not exactly easy, but it's also easy once you get it, I guess. So you need to just something needs to click, right? So once it clicks, you'll be super profitable. And I think to click takes, I don't know, a few weeks to a few months maybe. The important thing is psychologically you need to change your notions. You need to become more flexible and open-minded, and once you do that, you'll be fine. So again, I have three levels of products. If you're able to afford it, you should just get the trading indicators and the newsletters. Newsletters are excellent. I get all kinds of interesting stocks that we trade. I'm going to show you once again what we're trading in the elite. So elite means S&P 500 stocks and ETFs basically, and speculator is more of a speculative stocks and breakout stocks. So you get both of those for the indicators and newsletters. You get the speculator and the elite, so do sign up for that. If you really need more trading, then you can do the ultimate bundle, which adds a basic stock screener, which screens additional stocks for great setups. If you really need to trade a lot of stocks, and we have a new thing available, which is advanced stock screener. Has all of these lists of stocks, and it screens through those stocks, and it shows you if it's crossing those lines basically. And thousands of stocks. We're looking at 3,000, 4,000 stocks. When I send out the speculator stocks, this is from this list. All stocks with options. You can see there's 4,000 stocks, and I get about 130 alerts per day, and I narrow them down to just a few basically. So like this many stocks. So you get just the juiciest, the best setups. All right, I went way over. Thanks for watching again. So head over to MasterCharts Trading, and if you have any questions, please don't hesitate. Contact me and ask me any trading related questions. All right, thanks for watching. Have another great trading week. Bye bye.